All right. Let me know if you guys can hear me, because I know sometimes I normally forget to unmute myself.
Yeah, I can hear you.
All right, perfect. So let me start recording this. All right, good morning, guys. Today is Wednesday, October 4th. As usual, we'll be doing analysis for US 30, gold and EU. So starting off, my daily bias, looking at the daily biases, my daily bias for US 30 is bearish. Last closure of a daily SAR was bearish, same as gold, same as EU. EU still, the last closure of a live SAR on the daily was bearish. For the US dollar, I'm still bullish on it, same thing. So my daily bias is as clear as day and night. So I hope there's no confusion about how I normally trade one direction only, and I don't try to trade both buys and sells. So from the daily time frame, I come down to the 1 hour, 1 hour and 4 hour. In the 1 hour and 4 hour time frames, I extend my SARs. So for those of you who have any of my indicators, we have the SAR settings in all of them. And so in here, since I'm only interested in sells, I'm only interested in the red lines. I extend to the maximum of 500 candles. So, and then I look for anything that's at least a double. And I know we have a gold trade coming in, but we have another like 20 minutes for this trade to validate. So for US 30, right? I start on the 4 hour. And then I look for any zone that has at least a double SAR. So anywhere that the SARs are close together and the distance between this double SAR should be like about 10 pips. So there's nothing for any of these instruments based off of the 4 hour and 1 hour timeframes. So I moved down to the 30-minute and 15-minute. So for US 30, at the 30-minute, same thing, I extend. The only timeframes I do not, let's see, just 1 second. See. So the only timeframes I don't extend the SARs, of course, are 1 minute, 5 minute, and daily timeframes. So in here, on the 30-minute, there's no double SAR that's close to where price is. Price has to come all the way up here for me to even start thinking about selling US 30 in that zone. And then let me see this. Okay, I'm sorry, I'm multitasking. Okay, let's see. So nothing on the 30-minute, 15-minute, same thing. I look for a double SAR. So here you can see maybe, right, some people can consider this a double SAR. The reason, and I know gold has not yet validated. This to me is not a double SAR. The reason for
the Office 365, and then at the same time,
the reason this is not a double SAR for me, the distance between the top and the bottom, that's 30 pips. So remember, for me, what defines a double SAR, I need the SARs to be at least 10 pips apart. The reason for that is my stop loss on gold is 30 pips. So if I have an SAR level that's like 30 pips, that's 100% of my stop loss. My stop loss for US 30 is 50 pips. So with US 30, you can get away with having SARs up to 20 pips difference. But this one right here, this one, the top SAR is 3430, 33,030. The bottom one or the next one is 32,995. So that's a 35 pip zone. So I'm not going to consider this as a double SAR. So for US 30, nothing on the 15-minute time frame, nothing on the 30-minute time frame as well. So I don't think we'll catch any US 30 trades. Gold, based off of where gold is, this is actually a triple sell SAR. The reason, because if I delete this, let me show you guys. If I delete this, you'll see 1, 2, 3. Now, for this one, the top one is at 1824.3. Bottom one is at 1823.9. So that zone is a 0.4 pip zone, or a 4 pip. Is it 4? I normally tell you guys I'm terrible at math. Yeah, I'm sorry, not 0.4. It's a 4 pip zone. So that's a perfect triple sell SAR. So actually this is a triple and not a double. So for me to take a trade here on this gold entry, oh, and EU, EU also validated. I don't know, Audrey, if you caught it. I know you've been waiting for EU sells. I've been waiting for this to come back. But anyway, let's finish with what we have here. So for gold, on the 30-minute time frame, what do we have? We also have on the 30-minute time frame another triple sell SAR. So this zone right here, 1823. But for us to take a sell down here, we would need 2 30-minute candles to close below here. So that's another after another hour. So I'm probably not even going to be on the live session for that long, but this is a triple sell SAR on the 30-minute. On the 15-minute, we have a triple sell SAR right here. And also we have another double sell SAR. The top one is 1823.3. Bottom one is 1822.6. So that's like a 8 pip zone. So this also qualifies as a double SAR on the 15-minute time frame. Now, for me to take this trade, I need this candle to close below this bottom SAR. And then I need to wait for another 15 minutes. And then I need the next 15-minute candle to also close below that zone. So my entries are always 2 consecutive candle closures. So for this trade, we have to wait for another, and I don't like, if it drops too far, that's it is what it is. But you can see the logic behind it. I don't normally enter trades on impulse. Remember, the SAR gives you, as I went over yesterday, it gives you the high probability the trade is going in that direction. You don't have to wait for 2 candle closures like I do, again, but just understand the logic of the SAR and find your own entries. There are people who enter on impulse or use buy or sell limits. I do not. For me, I would rather wait for those candle confirmations and then I hop into that trade. And my trades are always either break and continuation or test and rejection. So if we go to EU, you'll see the test and rejection entry. Unfortunately, by the time I was seeing this, it was a little too late. But test and rejection, so here, EU, same thing. When we go to the 30-minute, we are looking for anything that's at least a double sell SAR. That's if you're looking for sales like I am on EU, or if you are looking to sell EU. So on the 30-minute, unless EU comes all the way up here, because I have some 30-minute zones marked here, or comes back all the way down here, I have no entry on the 30-minute. But if I go on the 15-minute time frame, you can see I had this zone, I had this zone here, this zone here, this zone here, this zone here. So yesterday when EU was here, I said I didn't feel comfortable entering any sell down here for EU. I would rather wait for price to retrace up. So it doesn't mean that you just have to keep selling on impulse or abruptly. And this is how, as much as you can be looking for sells, price can literally shoot all the way up, but you're not getting entry validations, which is, for me, the most important thing about waiting for those 2 candle closures. So this was also a sell zone, but if I sold on impulse in here, I would have gotten burnt. If I sold on impulse here, I would have gotten burnt because here there was no entry for a sell. Price broke and closed above that zone. Didn't give a break and continuation for a sell, didn't give a test and rejection. Here, this particular trade, now this was a test and rejection entry because you can see for test and rejection, you do not want the test and rejection candle to close anywhere above that zone. So here, yes, this was a valid sell because the first candle tested this double sell SAR. The next candle tried to close above, but was rejected and closed below. Now, the time of this candle, 5:15 p.m. Eastern Standard Time. And I normally tell you guys, with any of my strategies, even when I release the EA to you guys, do not trade anywhere between 3 p.m. and 11 p.m. Eastern Standard Time. If you do, you can still do it. If you do, understand that you're highly likely to be manipulated. So as much as this trade here was valid, okay, so we need for gold, the break candle confirmed. So we need the continuation candle. We need this current 15-minute candle to close below this zone for me to enter that sell. Anyway, so here for EU, yes, the trade was valid for test and rejection, but if you entered, guess what? Even with the 20 pips, because for me, for FX pairs, I use that 25 pip stop loss. Guess what? You'd have gotten stopped out easily. So That's the importance of following the rules that I tried to give you guys. Okay, same thing happened again here. This was another sell zone. We didn't get a test and rejection here. Price attempted to give a break and continuation. So there was this break candle, continuation candle. This was a valid entry as well. It was 8:15 in the morning, but I know there was some news earlier on in the morning as well. Unfortunately for this trade, you would have gotten stopped out and ideally gotten faked out because now price is coming back up. And then now, guess what? You wait for the next entry that's up here. You have your sell zone up here. You wait either for you to have a test and rejection here. You have to have a candle that tests this zone and closes below. And then you want the next candle to also close below. So this is why this was the test and rejection candle. Unfortunately, I saw this trade after it had already validated. I was hoping EU retraces back up during this live session and I was going to hop into the trade with you guys, but it doesn't seem like EU might retrace back up. So the only trade we might get today is gold. I don't like how it's pushing. So this is where you guys should start planning. This trade in the next 12 minutes, this candle will close. If this candle, so let's assume this trade validates. Now, if my best case scenario is I want gold to push up and this 15-minute candle to close next to these SARs that I'm trading. That is the best case scenario. But it doesn't seem like gold is going to close anywhere. I know we have 12 minutes, but it doesn't seem like gold is going to close up here. And keep in mind, I'm still anticipating gold to test 1800. And if we break 1800, I went over some analysis with you guys yesterday. If we break 1800, they might push this thing all the way down to 1600 or 1650. But if this trade, so let's assume this candle closes here or closes somewhere here. Remember, the key thing for the SAR strategy is to always make sure your stop loss is above the SARs. So for me, I have a static TP and stop loss for everything. For gold, my stop loss is quote unquote always 30 pips. For US 30, stop loss is quote unquote always 50 pips. FX pairs stop loss always quote unquote 25 pips. The reason for that is I always do a 1:2 risk to reward. So I can extend my stop loss for gold to like 40 or 50 pips. But for me to still stick to a 1:2 risk to reward, that means if I have a 50 pip stop loss, I will need to have a 100 pip TP. I don't feel, when I first started trading with you guys, I used to do like 100 pip stop loss on gold and 200 pips TP. I don't do that anymore. So I'm trying, over time, and if you guys have been with me, I've been trying to refine this, my entries. So I'm sticking to my 30 pip stop loss. So if this trade validates and gold keeps sinking the way it's sinking, I will hold back and wait for gold to retrace up here. And then I will go down to the 1 minute time frame and remove the extension. So remember, if I go down to the 1 minute or 5 minute time frames, I'm not extending my SARs. The reason for that is, look at what happens. If you go down to the 1 minute and you still have your SARs extended, you don't even know what you're trading. So I would come down here to the 1 minute, which is what I'll actually do right now, because I don't think that trade will retrace anytime soon. Plus, I've already marked up my zone. So I will go back to the 1 minute time frame and then hope for gold to retrace. So I know this is the zone I'm trading. This is my 15-minute zone. I will wait for gold to retrace back up, and then I'll wait for an instance like this. I'll wait for gold to break and close below a live SAR. So you see the same thing that happened here. I would wait for a candle to break, for a live SAR, sell SAR to be created on the way back down. And then I would wait for 2 consecutive candles to close. And at that point, I would enter gold. You can still enter on impulse, but know that you're risking being stopped out or being faked out, etc. So if there are any questions, feel free to ask, but you can see this trade just went by so fast. And I did take a gold sell yesterday. I told you guys I haven't traded in like a week. So I took this gold sell yesterday. It was the same logic, right? Same zone. If I show you guys, let me try and see and let me guess, EU is dropping as well. Let me show you guys, same logic. So I just waited, and then gold, unfortunately, this came even much later during the day. It was about 2 p.m. This was a trade, 1 p.m. yesterday.
I was gonna ask you about that too. It's funny you brought that up
because I was seeing that it would have been the same zone sell pretty much.
Yep.
And I know we don't trade supply demand, but I mean, can you use that as a confluence to kind of enter an impulse?
Yeah. So SAR or organically, or the original SAR strategy stands for stop and reverse, but you can consider SAR support and resistance, supply and demand, because it's ideally the same concept technically. So yeah, you can use supply and demand also. So here yesterday at 1, I saw this. So I'll replay this because gold is dropping heavy. So I saw this zone. So I already had this 15-minute double sell SAR. So what is this? This is a break because this candle broke and closed below the sell SAR. This is the continuation candle. Continuation candle literally next to the SARs. That is what I'm hoping gold to come back up and retrace and give us the same entry, because you guys know, I don't, for me, I don't like waiting. And, once the trade validates, I normally hop onto the trade. And unless I'm trading on the live session with you guys, which most times I'll just wait for a retracement. But normally for me, if a trade is valid, I'll more times than not just hop in and take the risk, or I'll use lower risk. But anyway, for this trade, this was a perfect. This is what I normally look for, because when you get a trade set up like this, guess what? You don't have to go down to the 1 minute and 5 minute timeframes, because you're looking for your entry to be as close to the SAR as possible. And then this gives you your stop loss much higher than the SARs and whatnot. So I saw this trade, and this validated for me, and I went ahead and entered this trade. So the trade had started off in loss, stop loss, and this is the importance. So you see what happens here? This is the important reason why you want your entry to be next to the SARs, this right here. Because can you imagine if this trade had validated down here and then I entered that trade? Guess what? I would have gotten faked out. And for this trade, I was risking I was risking 1.5%. So this is the importance, especially for some of these trades where sometimes I up the risk. I need my entry to be as close to the SARs as possible. So look at what happened here. Trade came back down. So at this point, when it achieved, and because I held this thing overnight, and actually I forgot about this trade because I didn't even get to set break even, because once you achieve a 1:1 risk to reward for any of my strategies, you go ahead, and this is another reason why I don't like holding trades overnight. So at this point, the trade was at break even. So if I was awake, which I wasn't, I should have set break even at this point, but I was still asleep. And you can see gold melted to the downside. Now, if I was at break even here, depending on slippage, I probably could have gotten slipped out, or depending on my broker, but you can see the trade finally ended up at full TP. And these levels are static. So you can see even right now where gold is selling from, it's the same zone that I entered yesterday. And with this entry right here, the entry was at 1 p.m. So it's still lined up with my rules. I didn't break my rules of trading between 3 p.m. and 11 p.m. Eastern time. So this is what I want. I need gold to hopefully come back up. But for you guys, if this candle does close anywhere below this zone, it's a valid entry. So even here, even if this candle closes here, your stop loss would technically be still above the SCRs. But what you want to avoid, you see the candle, the spike that I showed you guys, you want to avoid that manipulation, because if you enter this trade here, sure, it can literally go down straight to TP. We've seen a bunch of those trades happen. But are you willing to take the risk that if you enter this trade, let's say this candle closes here and you choose to enter that trade there? And again, I'm not trying to impose fear on anybody. I'm just trying to ask you, if you enter that trade there, hopefully it goes straight to TP. But let's assume gold retraces up and you get stopped out or faked out and gold continues dropping and gives somebody like me who waits for an entry, a 1 minute entry here, and gold goes straight to TP for me. Would you feel bad that you got faked out? If you're not going to feel bad that you got faked out, sure, go ahead and enter on the close of this candle despite of the distance. But if you're the kind of person, because that's the kind of trader I am, if I entered this trade here, as much as the trade is valid, but then I knew in my mind that there's something I could have done better to avoid getting faked out, I would be mad at myself. So that's the kind of, again, you have to know the kind of trader you are. For me, I'm the kind of trader that if I take a risk and I know that there was something I could have done, and I knew I could have done before the fact to avoid, say, getting faked out, I will be so mad at myself and say, okay, look, if only you had waited. So it all depends on what kind of trader you are. So for me personally, I'm hoping in the next 3.5 minutes for gold to at least push up to this zone right here, to 1823, 1824 area. At that point, I'll enter that trade, and I would see where it goes. The other option you have, it can close here, and then you can decide to enter with half the risk you'd normally choose. So for me, I do 0.75% per trade normally. So if you normally risk 0.5, you can start with a 0.25. And then if the trade goes into full TP, guess what? You're up 0.5. If the trade retraces, you're not that much in drawdown. And then you can use the other 0.25 or 0.375 that you saved to enter or to scale into the trade. So this is the point. You have 3 minutes to make that decision, but I already told you guys personally what I'll do. I will wait on the 1 minute time frame. Oh, there's this other thing I'm running. Okay. Right. So I was hoping to get something for US 30. Okay, and Audrey says there's news as well at 10 a.m. What's that news? ISM services PMI. Yeah. Yeah, that's gonna be tricky. Yeah. Okay. So either way, I'm still, for me, yeah. So keep in mind, there's also news at 10. So I'm hoping what happens is during the 10 a.m. news, they spike gold up and then they drop it back down. So that's what I'm hoping to happen. So be mindful that we have news at 10 a.m. The EU, I'm hoping we get a retracement on EU because I really like this EU sell right here. So, and EU, I'll do the same thing, right? If we get a retracement up, I can, but for FX pairs, like 20 pips, as much as it doesn't seem like a huge stop loss, with the SARs, it's normally spot on with FX pairs. With FX pairs, like you see for this zone, this is a 25 pip zone. So I really don't have to wait like exactly next to here. So the instruments you want your entry to be right next to the SARs is like gold and US 30 or other FX pairs or other instruments that move pretty heavily. But for like FX pairs, you can get away with having your stop loss, your entry a bit far away from the SARs, because even if you lay it down on the screen, you'll notice that your stop loss is far away from the SARs. So, but I'm hoping we get a retracement and I'll enter both gold and EU. US 30 really has been doing nothing today. Yeah, so if you guys have any questions as we wait for this trade, feel free to go ahead and ask. Right, so that so the trade validated. Now, if you're entering on impulse, that is your entry right there. But for me, again, keep in mind, I'm waiting up here. Now, the other thing that's happening, do you see here what's happening? We have another sell, we have another double SAR here. So this candle that closed already gave us the break. So we can get another possible break and continuation down here as well. So we have two possible trades that lined up. or that are lining up. So there's that one, and then there's the one at the top. Excuse me. So personally, I'll wait for, I'm hoping they bring this thing back up, but yeah, we would have been like at a 1:1 on EU right now. So here's the other thing. So you see this trade that happened before the live session. So if I miss a trade, because for example, for this one, I saw it like one candle too late. So if a trade, so let's say this is the case right here. So this trade already reached a 1:1 because my stop loss on FX pairs on EU here was 25 pips, TP 50 pips. Now, at this instance, this trade should be a break even if I had taken it. Now, if this trade comes back up and takes, and for example, hits break even, at this point, I would not enter the trade on impulse, because keep in mind here, as much as the trade validated, you don't want to be chasing something. So for me in this particular trade, if it if I miss a trade and the trade that I missed and it was a valid trade and I would have taken it when it validated, if that trade hits a 1:1, I'm done with that trade. I'm not looking to re-enter that trade, because yes, EU can come back up here and then I can enter the trade on impulse, and guess what? EU can keep trending to the upside and stop me out. So I call that, it's kind of FOMO. So for me, to avoid FOMOing into a trade that I've missed, if a trade that I've missed goes and achieves a 1:1, such that if I had taken that trade, I would have been at a 1:1, I get rid of that trade and wait for another trade. So in this instance, I'm done with that trade. I'm not looking to re-enter EU, even though it retraces back up. For me to enter another EU sell, I have to wait for another setup. So right now, you can see we possibly have a break and continuation entry either here, this SAR zone, and this SAR zone here, or for EU to come back up here and give me another test and rejection entry or break and continuation entry. So you can see for this trade, for this particular one, and this is what I was talking about. If you entered on impulse, yes, you could have been in profit. But so this is one of those instances. You might enter and the trade goes straight into profit, or you might enter and the trade retraces back up. So always be aware of those things. So for me, I'm the kind of trader that, yes, the trade validated, but the gold unfortunately pushed so heavy. So I'm not one to take the chance on, oh, maybe it's going to go to full TP. Maybe it's going to go to stop loss. So there's that trade. So the first one is still valid. If gold retraces up, I'm going to, no, actually even for the first one, if this trade, so same thing I told you guys for EU, if this trade, so that's the first one, that would have been the entry for it, but because it did not align to my stop loss, so if gold gets to, so same thing I just did with EU. So I'll just do this markup. If gold gets to, that's 1820. If gold gets to 1817, which is where if I'd entered this trade, even on impulse, because again, the only thing that, the only trigger is that the trade needs to be valid. So if gold gets there, so I'll put this back up here. If gold gets to this zone, which is where if you entered this trade, because I told you guys, you don't have to wait for me to enter. If gold gets to this zone, 1817, that's where if I entered the trade, I would have my stop loss at break even. So if gold gets here, guess what I'll do? I'll come ahead and delete this trade because I'm done with it, because the trade has already gone without me. It's achieved a 1:1. But until it does that, this waiting game is still valid for me. So it does seem a little confusing. So let me know if I need to go over it again. It's the same thing I went over with EU. If you miss a trade, so same thing with this gold trade, I've been marking it up since this live session started, and I was hoping for this huge red candle to close somewhere up here, but it did not do that, and gold melted to the downside and validated. So it's no longer a possible break and continuation. It was actually a break and continuation because both candles validated. So I'm considering this as a trade that I quote unquote missed. Now, if this trade that validated here achieves a 1:1, if I was in that trade, but again, I'm not, Then at that point, right, my idea would be if you achieve a 1:1 with any of my entries, you go ahead and set break even. So I would consider that I'm already in that trade and it's achieved a 1:1. But so long as this trade has not achieved or has not hit 1817, if gold comes back up, I'll still go down to the 1 minute and find the entry. But if gold achieves a 1:1, 1817, and gold retraces back up, I'm now going to look to enter this trade because it would have already been stopped out at break even. So I get done. And here, guess what? We have this other trade that's also lining up. So there's that one. So let me put this to the left here. And then we have another break and continuation here because we have this zone here. So it's ideally the same thing right here. I might as well copy this. And same idea here. If gold keeps dropping the way it's dropping, guess what? I'll still wait for that retracement. I'm not willing to take the risk and jump in on impulse. Right, so that's the first one. This is the second one. So you see like this second one right here, this is what I want. In the next 8 minutes, I would want this candle to close where it is. So I want gold for this 15-minute candle to close where gold currently is, because at that point I can take gold with a 30 pip stop loss, 60 pip TP, and my stop loss will be above this sell SAR zone that's that I'm trading. But if this 15-minute candle closes here, guess what? It will be the same scenario as trade number one that I didn't take because it's going to be too far off. So I need this 15-minute candle to close above here, or even to retrace somewhere above here before it reaches this 1:1, which would be for the first trade. And that will allow me to go down to the 1 minute and get that trade. Let's see. So EU, same thing here. We have a break and continuation entry. We have this. So this is a sell SAR zone. And if you don't get a trade, don't worry about it. The key thing is for you to understand the concepts, because after the live session is over, you can get trade setups. So there's always going to be another trade. So, same thing I showed you guys here with this results. I haven't traded for like a week or maybe 9 days, but the one time that I trade and I get that one nice setup, I can even go with a 1.5% risk and make 3%. So this was a 200K account and, just made this. So I'm pretty sure I made a lot more in one trade in 2 weeks or even in 1 month than other people who might be forming into trades and all of that. So this is important. If a trade, so which is why you don't see me. I mean, I have the leverage to have even jumped into that trade in here because I'm already up 3% for the day. So I could have taken the risk. But if you start breaking your rules, no matter how small the rule is, if you break it, that will show in your other trades. So no trade is ever too small or too big. So if you break a rule thinking that, oh, I'm only breaking this rule because I'm only risking 0.1%, you break the same rule when you're risking 1.5%. So the key thing here is for you guys to learn, because remember, these trades will always set up, because here for that trade I took yesterday, there was a bunch of entries. So the trade I showed, the validation was here. Guess what? There was another break continuation. This was another entry for a sell down here. Another one, break continuation, another entry down here. Test and rejection. This candle tested this zone, closed below. That's the rejection candle. The sell entry was another one here. Guess what? Another one here. But I know this is during the times I normally tell you guys not to trade. So let's go after 11 p.m. So after 23. This was at 12:15 a.m. This was test, rejection entry, sell entry would have been down here, another test and rejection. So the key thing is for you guys to always first understand the strategy, and then afterwards go ahead and backtest and see where you could have entered. So this trade still hasn't yet reached that 1:1. So I'm just hoping something happens and gold pumps up just a little bit, and we can catch that gold sell. Mm.
Yeah, bro.
Mhm.
On the on the 15-minute and the 30-minute, when you get an entry, let's say in one time frame, you won't get it on the other time frame. So if you got an entry on the 30-minute, you won't see it on the 15-minute.
Yeah, you have to mark it up, right?
Yeah.
So you can either one way, and I've been thinking of doing this, but I'm just trying to make my charts less colorful. So you can use, so for me in a sell zone, I use this red hue. In a buy zone, if I'm looking for buys, I use a green hue. So you can maybe use a purple hue to mark your 30-minute zone, and maybe a red hue to mark your 15-minute zone. So also here, this entry will line up in the next 17 minutes. So remember, we have this triple sell SAR on the 30-minute time frame. 1, 2, 3. We had a break. We had a continuation. So this also, we also have a 30-minute entry here for gold. Yeah, but yeah. So the only way for you to be able to see your markups in the 30-minute and 15-minute is, find some distinguishing way to mark them up, to mark those zones up.
Yeah. What's it called? Yeah, but the second, yeah, the second candle, if it closes, yeah, so, what is it? Yeah, so the second candle, when you said if it closes too far away from these double SARs. So, wait, so let's say it closes like, let's just say it closes around 1970. Yeah. Would you look for the, would you look for the, buy to take it back up?
No. So for me nowadays, you guys can trade both buys and sells. I do not. I trade. So for me, every day, for you to know whether I'm going to buy or sell, I just look at the bias. So long as gold remains, the last closure of an SAR was here, I'm just going to keep selling. But I'm not selling the bottom. I'm looking for zones where I'm going to sell. I can trade both ways if I want, but every time that when I first started trading the SAR, and I was trading both buys and sells, because keep in mind here, unless I use another strategy, if I have both green and red lines on the chart, it's just too much. So it's confusing to me. So if you're able to do that, and okay, so the other question to you, what's your confluence for buying at 1817?
No, there's nothing there right now. But the thing is, yeah, the green and the red lines. Let's just say we put them both on, yeah. What's it called? Yeah, when you're saying put your TP, go for the what's it called? 1:1, yeah. When you look for when you've got both the red and the green lines, I know it's confusing, but the green lines, doesn't it like show you like look that you should think about getting out the trade? I don't know how to say it.
Yeah, no, you're right. Yeah, it does show you that. But right, keep in mind, for me, and this is again, people are different. When I was trading both buys and sells, I was winning, but I was spending too much time on my charts, which is why, like, even for me right now, this reversal indicator that I'm using, because this is a reversal indicator, I have an option to turn on buys. But guess what? If I have the buy signals turned on here, and okay, so give me 1 second. So I'm taking the gold sell with the 0.75% risk. Wait, give me 1 second. You know what? Yeah, 0.75%. 30 pips TP, 30 pips stop loss. So that's the trade and it validated. So this is the second trade. So this is not the first trade, if that makes sense. So this is a second trade, break and continuation. And the trade is in profit. So anyway, let me go over. So every time I was trading, okay. So let's assume, you see how I've turned on the buy right here. And let's say I get like this sell entry. And then guess what? This candle, let's say this candle printed a buy signal. Let me delete the first markup right there. This candle printed a buy signal. That's going to mess with my psychology, if that makes sense. So that is the reason. Huh?
Oh, sorry. Say again.
So if you see, like with this reversal indicator in here, since I'm only looking for sells, I normally just turn off the buys. But let's assume I'm trading with both buys and sells, buy and sell signals showing up on the chart. And this trade for me, this SAR trade validated for a sell. But then the indicator gives me a buy. That's going to mess with my psychology because, okay, like the SR is going to tell me, I already gave you I've already validated a sell trade for you. And you see, like this one, this is what I was hoping and praying for, because this is my ideal entry. I don't have to go down to the 1 minute for this because the SAR gave me the close literally next to the SARs. But then I come here and then I have the buys, and then let's assume a buy signal printed down here. Then I would be like, okay, SAR is telling me to sell, reversal is telling me to buy. Then I get that analysis. You guys go ahead and set break even at a 1:1. 1:1 risk to reward would be when the trade reaches this zone. So when the trade reaches this zone, go ahead and set break even. So same thing without the signals. So if I take off the signals here and I put turn on the green lines, the first thing that I notice, I have both red and green lines. So the first thing I notice here, analysis paralysis. I can't really see where the double buy SAR is. I can't really see where the double sell SAR is, if that makes sense. So I can't really see it on the chart. But assuming I could see it, I could see both the doubles and the triples for both green and red. Okay, let's assume here I get a green SAR here, which again, SAR might mean stop and reverse. But then this, and I'm looking for sells. In my mind, I really want to sell gold. And then I have a green buy SAR here. That might also tell me, okay, the red sell SARs are telling you to sell, but then you have a green SAR that's down here. So that might start, I might start thinking, okay, instead of risking 0.75, I'll risk 0.10. Or maybe I'll be like, okay, let me just hold off. The idea here for me, again, people are different. For me, I easily get analysis paralysis. So which is also why, if you guys remember when I first started trading with you guys, I used to have trend lines on the hourly time frame, and I had a bunch of trend lines. Like right now, I even deleted those trend lines because if you guys remember when we first started trading this SAR strategy, during one day, the trend line was telling us to buy and the SAR was telling us to sell. And then I listened to the trend line, and then guess what? The SAR trade would have hit TP, and then the trade we took with the trend line hit stop loss. So this is what, just find something that works for you. Like right now, I don't even know where the trend lines are. You can see I actually even deleted them on the hourly time frame, because as much as we were winning, and you can look at the win rate right here. I'm not saying trend lines are bad. I'm just saying find one strategy that works for you. And if it has high probability than your former strategy, or high win rate than your former strategy, go ahead and stick to that. But yes, you can use both red and green lines. You can look for both buys and sells. If that confuses you, do not. If you can do that without getting confused by trades, yes, go ahead and do it.
The thing is, like this trade, the TP, right? That there's nothing below, that where the price is at right now. There's nothing below. So how would we know where to?
You just have to trust the trade, right? Because the only way, I mean, you never know. Even the people who are very good at trading, they don't know whether their trade is going to hit full TP or stop loss, right? But what they use is probability. That's it.
Yeah.
So for me, if I know that gold already gave me 3% this morning just by trusting that setup, Why
Yeah.
wouldn't I trust? Now here, one thing you can ask me, what do I see here? And we just saw this. I can even turn on the order block indicator and see maybe if we have some zones here. So we have a 15-minute bullish order block. I'm not really cautious about those ones. If I turn on the zones indicator, yes, we have a lot of buyers here, but what order block can these buyers? So remember when we used to trade order blocks, we used to be like, if you see buyers here, it doesn't mean that price is automatically going to go up. What order block can those buyers use to push price up? They have a 15-minute order block. Okay, 15 order block is not as powerful as, say, an hourly or a 4-hour or whatnot. So I'm not even cautious of anything here. Now, if you ask me, one thing that I would be cautious of, the wicks. So I always tell you guys, look at the wicks and ask yourself, what story are they telling you? So this wicks right here, which is why I looked at the order blocks indicator, it's showing that we have a bunch of rejection right here. So we do have some buyers here. But for me, sellers have more power here, even the momentum. So the key thing here is to have a stop loss. If you're selling, a stop loss that's far enough to avoid manipulation by these buyers that are sitting here. But if gold breaks this, it's flashing. I mean, I've seen this set up a bunch of times. If gold breaks this, it's going to flash down. And gold technically had created a double bottom here. So this can also be a triple bottom. But I'm not really, because once I start looking at that, I'm looking at reasons why my trade isn't valid. But the SAR already told me, hey, I've given you an entry. That's it. Whether it hits TP, whether it hits stop loss, that doesn't matter. I've only given. But when I'm starting to look for reasons my trade, I'm in the trade, and then I'm starting to look for reasons that gold can reverse back up. That's going to affect my psychology. Then I'm going to be like, okay, I'm going to close this trade. And guess what? If I close this trade right now, that's probably when gold is going to die till 1620 in one candle. I'm just kidding, but so for me, the thing is, if I'm in the trade, I'm going to trust that trade. That is how I've gotten good as a trader. So at the very least, which is why you have those all of those parameters you set for yourself. So for me, I tell you guys, if the trade hits a 1:1, guess what? Set break even and let the trade ride. If the trade takes you at a stop loss, ask yourself, is there anything you could have avoided? So fingers crossed, if this trade hits stop loss, I'm not going to feel bad, because I'm going to be like, the trade was valid to me. I followed each and every one of my rules. And to me, this is like an A+ setup for me. An A+ setup is when the trade validates and gives you an entry next to the SARs you're trading, so that you do not have to go down to the 1 minute or 5 minute timeframes. So here, I'm more positive. I'm thinking of the reasons my trade can go to full TP, and not thinking, oh, maybe gold is going to reverse here. So, and that's also always the reason why you have your rules in place.
The third candle. So from where this SAR is at. So this SAR is around 1921, isn't it? The double SAR.
1821.
No, 1821. Yeah. So the third candle. So the third candle, because it's closed next to the SAR, so the TP is based off of the stop loss. I know that part, but the thing is, what is it that you're looking at on the left? Is it the bottom?
No, the candle closure. So where are the candles that are closing? So remember, break and continuation, those are 2 consecutive candles. Test and rejection, those are 2 consecutive candles. You need those 2 candles to close above or below the SARs you're trading, depending on the direction. That's it, the candle closures. So if this candle, this continuation candle, had closed above this 1820 SAR, guess what? I wouldn't have taken the sell. So you just need those 2 candles to close. That is to me, the easiest thing is to find your daily bias, because it's so clear. Like, what was that last daily? Same thing about the test and rejection. It's so clear because you just need 2 candles to close below or above. So here, this is my break candle. It closed below my double sell SAR. This is the continuation candle. I wanted it to close where it actually closed, and that's it.
So, the second candle, how far would it have to close for you to go to the 1 minute? So let's say if the 1 minute closed too far away from the SAR, Like how many pips away? Or
So
how far?
that's relative. So if, and that's different. But for me, if you ask me, if this 15-minute candle closed here, my SAR are here. So let me put this on the screen right here, and you can take a screenshot of this. Always ask yourself, relative to where you're entering, where is my, relative to where you're entering, you need your stop loss at the very least to be above the SARs you're trading. That's it. That is what's going to define everything. So always ask yourself, so number one, is the trade valid? If the trade is valid, this rule here, number 7, set stop loss below or above the parabolic line, depending on the direction. A better stop loss may be below or above the previous high low. So if this trade validated for me, or let's say assume this trade validated here, would it validate rule number 7? Is this stop loss above this SAR? So you can still take the trade, but for you to take the trade, you wouldn't use a 30 pip stop loss like me. You would probably use like a 50 or 60 pip stop loss, which is to mean you do 60 pips stop loss, 120 pips TP. You don't have to use a 30 pip stop loss like me, but the key thing, always make sure your stop loss is above the SAR. Also, if same thing, let's assume this trade closed down here and the entry was here. Okay, your entry relative to your SCRs you're trading is like 80% of your stop loss. Are you comfortable knowing that price can come back up here, weak you out? Because remember, SCR, think of SCR like this. SCR is telling you, I've given you a trade setup that has like a high probability, 70%, 80%. Just give yourself a number, even though you want to give yourself 99.9%. So the SCR is telling you, hey, I'm giving you a trade setup, and this trade setup has a 99% probability of hitting. Your job, if the trade validates, is to determine, are you going to jump in or are you going to wait? So if this trade had validated down here and my stop loss, yes, my stop loss is above the SARs, but the entry relative to where the SARs are, this is like 80 pips, 80% of my stop loss. So knowing that SAR stands for stop and reverse, they can reverse price back up, retest this zone, weak price up, like the way I just showed you guys with the entry I took yesterday, fake you out, stop you out, and drop price all the way back down. So for me, that's why I come in and say, if my entry is like 70%, if where my entry is, it's the SARs I'm trading are like 80% of my stop loss, 70% of my stop loss, I will wait for a retracement. Like, just, okay, think of it that way. How far, you ask me? Okay, if your entry, if the SARs you're trading relative to your entry are like 70% of your stop loss, do not enter that trade. If you choose to enter, know that you can get faked out. Yes, the trade can go to full TP. So know that you can either get faked out or decide to wait, which is what I normally do. Gold is going to flash any moment now. Choose to wait or use half the risk you normally use. It's as simple as that.
Yeah. So so what's the 1 minute?
Wait, let me answer a question. Shaban, I know you said something on the chat. Yeah, so this is the live trade. So normally I say I normally mark up the trades. So like this one is it moves from possible break and continuation. So for a live trade, I'll always say I'm taking this trade. So I don't mark up trades that I don't take. So I normally mark up the trade. If it doesn't validate, I normally say, okay, the trade did not validate, or I say that I'm waiting for the 1 minute or 5 minute. But normally I'll say I'm taking this trade with a X risk. So normally I risk 0.75% per trade. So, but for me, I'm not one of those live traders that mark up trades and they don't take them. For me, if I mark up a trade, I'll give you like possible break and continuation, or once it validates, I remove the possible. And if, like what I'm talking about right now, if the entry is far away, then I'll say, guys, let's wait on the 1 minute, and then I'll move from the 15-minute time frame and go to the 1 minute chart. But then I'll say I'm taking this trade, 0.75% risk, 30 pips TP, 60 pips. Yeah, but this is a live trade because I did say I was taking it the moment I was calling it. Go ahead. What was it? Invest?
Oh yeah. So what's it called? Yeah. So before we ask about the 1 minute, you know the indicator, the reversal indicator. You know the time zone and the time filter. Do we have to adjust that? Should we change?
So I gave you guys this for the people who want the false not false signals. So if you don't want to see buy and sell signals during, so I normally tell you guys, right, like 3 p.m. Eastern Standard Time. So if I do this and I do till 11, any signals that show up here will be removed, right? So that's for people. I don't trade using signals. So for anyone who trades using signals, they can use that. It's kind of like a safe feature in there to avoid you from FOMOing or to keep you from FOMOing. So you don't, I don't use it. I just created it because somebody in here requested that. But if you feel like you're getting faked out by trading those hours, just come in there and trade the hours you don't want to trade, and then avoid trading those particular hours.
Also, even the time zone and the time for it, that doesn't really matter, right? That's just if you, that's just for the times that you said not to trade.
Yeah,
That doesn't
yeah.
even. Oh, so
Yeah,
it's
it's
the same
ideally a time
thing.
filter.
Yeah, so the indicator is literally the same thing as before.
Yeah, it's the same thing as before. This is just a time filter.
Oh. I was thinking about that. Yeah. So the 5 minute, when you extend, if you extend the lines on the 5 minute.
I don't extend
Yeah,
on the 5 minute.
yeah. What's the problem if you extend it on the 5 minute? Like, what's the issue? Like, I'm just saying.
Are you able to trade this?
No, I'm just saying from what you've seen. Like,
Yeah, but I'm asking you. So what can you see here on the 5 minute?
there's a lot of SARs.
There you go. Now, if your mind can handle this, my mind cannot. It's just too much. So remember, the lower the time frame you go, the more the SARs you'll get. So if we go to the 1 minute, you'll see this. So, I don't even know what I would be trading here. It's just too many. Because remember, you don't want to start asking or wondering where is the 1 minute or where is the double SAR. Like, for example, I know this is the 1 minute. So this double SAR is clear. But if price was in this zone where there's like 50 of them, you wouldn't really. So you want the SARs to be so obvious to you. So like, for example, this SAR on the 1 minute, this, I think it's a triple or double. This is so clear to anybody looking. But if I told you, find me a double SAR in here, where would you even start? Right?
Oh, yeah.
You'd have to start zooming in. So I'm not saying you cannot. I'm just saying you just have a lot of noise the lower the time frame you go. If I put this on the 5 second, you'll probably get more and more, right? So the lower the time frame you go, it just depends. For me, I just don't want a lot of noise on my chart. So which is why I do not extend my SAR. I'm not telling you you can't, but if you can distinguish all that noise, then sure, go ahead and do it. But if you can't, then there's no need. You're not missing anything.
Okay. With GU, if you go down to the 30 minute, can you see?
You say GU?
Yeah.
Let's see what I want to use. This gold is playing too much. 30 minute. What are you looking for? Buys or sells?
Sells. I think it's yes. Yeah, it sells. Yeah.
And for gold, you guys can secure on the way down, but for me, I normally either do TP, stop loss, or break even. So, but you can take partials on the way down if you guys want. Excuse me. 30 minute.
Yeah. Oh,
What were you looking for in particular? I mean, here we have a double SAR, but depending on the broker you're using, this could have been a nice test and rejection, but the test and rejection candles both closed. So this is where like the trade is invalid, right? Because this test and rejection candles both closed above. So this would be the next test. This candle, this would be the rejection candle. So for GU, the sell would be here, if there was any sell. But for you, if you're using a 25 pip stop loss, gold is going to die. I can see that is just a matter of. So this one, if you're trading these SARs right here, so same thing right here with GU, I wouldn't take this trade based off of this test and rejection right here. I would wait for the same entry, wait for price up here. We have another triple sell SAR. We have another double zone right here. So this candle can now be giving you a break and continuation entry. But yeah, for GU, I don't see anything valid on this test and rejection is valid, but the entry is based off of these SARs right here. You can see my stop loss is, the SARs relative to my entry are like 200% of my stop loss. So for me to take this trade, I would have to extend this right there. So this would be like a 70 pip stop loss. And I would do like a 140 pip TP. So that is how I would trade if I was actually taking that trade. But knowing myself, I would wait for the trade up here.
So the test candle invalidated because it closed above the SAR, right?
No. The test candle validated. I was looking at this too, because this would have been the perfect entry right here. So they're actually, it invalidated, but I'm just showing this is what I would have wanted.
Mm.
But the setup that would have been, would have been test and rejection. But what is the reason these two did not qualify as test and rejection entry? Look at where the candles closed. So this, actually, my bad, because I normally change the color of my candles. Okay, the test candle, or the one I would have wanted to be the test candle, closed above this bottom SAR. So at that point, I would have started from square zero to look for another entry. But what I would have wanted is, for example, this green candle to close somewhere below here, and then the red candle close somewhere below there, and then that would be the entry. But anyway, that was invalidated, ideally by the first candle. So the next entry would have been this candle tested, closed below. That's perfect. That's your test candle. This next candle, continuation candle, close below. Only issue is that you need your stop loss to be above here. And for you to have that, you would need a 70 pip stop loss.
Yeah, and so those SARs in the middle, right? What I know they're showing that they're the same thing, but so if the entry is at the top, what are those SARs in the middle showing?
No, it's the same thing. So forget about what so look at each SAR as a separate SAR. Same thing we just did on gold here, right? We had a SAR right here. Price did not get there, and this trade was already at break even. So I deleted that. I forgot about the SAR at the top. So you move on to the next trade. So here, if I was to enter GU, I would now focus on these SARs here. So I've already forgotten about the top one because the distance is too far. And we have another setup down here. We have a triple sell SAR. We have a double here. So you ask yourself, it's either break and continuation or test and rejection. So if this 30-minute candle closes below this SAR right here, this would be a break and continuation, right? This would be a break and continuation setup right there.
Isn't it just too far though?
No, I mean, if this candle comes back up and closes here, this would be, or closes anywhere below here, that would be a break and continuation. If this candle, current 30-minute candle, closes below this zone, it would be a break and continuation of this zone. So if this 30-minute candle closes above here but not above here, it would be a break and continuation of this zone, but then the break and continuation entry for this zone would be invalidated, if that makes sense.
Yeah, so this current candle, if it closes below these SARs right here in the middle, that would be
what, this one's or this one?
Which one?
Where I'm at, or this one?
Where you're at.
Okay.
The ones down. Yeah, those, yeah.
Yeah, right? So it would be both a break and continuation of this top SAR and of this bottom one.
So both of them?
Yes, both of them. But if the current 30-minute closes below, between these two SARs, it would only be a break and continuation of the top one, because the bottom one would have been invalidated because price would have closed above it.
Oh yeah.
Right? So think of them independently. So don't try to think of to trade multiple SARs together. No, just trade one at a time. It will be so much easier for you. So forget about, oh, you have 3 SAR zones. No, focus on one and then wait for the candle to close.
Okay, so that basically that SAR would just be like, you don't need to worry about that. No, that's invalidated.
Yeah.
What you're saying, right?
If price had closed in between, or if price closes in between, yeah. Let's see. This gold trade is, these buyers are holding this thing down. I just need to get a 1:1, and then I go ahead and set break even, because anyway, what else? US wait, there's this other program I'm running. Just this. Okay. Yes, 30.
Someone from FOMC is speaking right now. Is it not? Does it not mean as much?
So long as it's not Powell, let's see who it is. FOMC. Nah. Well, it does have effects in the market. But the person I normally look out for is Fed Chair Powell. Yeah, but it can have an effect. Yeah. So gold might not drop now, but we do have that selling. But here, so right here, those wicks I was talking about, right here. So this zone, we do know they are buyers. So it's just a matter. So I think right now, what might be happening would be a stop hunt. So I'm just hoping, because I'm still in this trade. So I'm hoping not to get stop hunted. And I know it came literally like 0.4 pips away from having a 1:1. But anyway, so I'm still in this trade. I'm gonna hold either way. And then we'll see. So US 30, nothing on US 30 today. EU, okay. So based off of what EU did, this is a break continuation, right? So we had the same, so the same thing I just went over with GU. So I look at these zones independently, right? So for these zones, I'm looking for that sell on EU. It's 50 pips, TP, 250 stop loss. So here, this is a break. So I go zone to zone. So I don't look at both at the same time. So I look at this, the first one, is this a break? Did it break and close below? Yes. So that's my break candle. I look at the continuation candle. Did it continuation candle close below? Okay. So that would have been a sell on EU. Stop loss, yes, would have allowed my stop loss to be above this zone. And then that's when I come in and say, do I want to enter the trade on impulse? Do I want to wait for retracement? Here you can see my entry relative to the SARs I'm trading. This is like 80% of my stop loss. So for me, I've already said, okay, for this one, let me wait for this trade back like here. Okay, I'm done analyzing the first one, the first zone. Then I analyzed the second zone. Did the second zone have any break candle? No, it did not, because this candle that was supposed to act as the break candle actually closed in between the SARs. It did not close below them. So my second trade is in, my second zone is invalidated. I go ahead and delete that, change this from a possible break and continuation to just a break and continuation because it's been validated. And then I wait for EU to come back up here. And then at this point, this is when now I go down to the 1 minute. So in this instance, I would go down to the 1 minute, and then I remove the extension of the SARs because I'm only looking for that one live SAR, not double or anything. So right here on EU, on the 1 minute, I would, and then I removed it. On EU, I would just wait for the same thing that happened here. You see this live SAR? This live SAR, I would wait for a live sell SAR to be created, and I would wait for 2 1-minute candles to close below there. You see, so there it is, that live SAR. So I would wait for 2 1-minute candles to be created, and then I would sell EU. But because I'm already in the gold sell, I don't like trading the same instruments, instruments that move alike in the same direction. And like, honestly, I know for this gold trade, so I said for this one is 0.75% risk. For me, since I'm already up 3% for the day, for this trade, I'm actually risking another, I'm risking 1.5%. Where did my chart go? I'm risking 1.5%. So if I lose this trade, because I'm already up 6K, so I'm risking 3K. If I lose this trade, I'll still be up for the day 1.5%. I'll only have lost 3K. If I win this trade, I'll be up for the day 12K. But for you guys, if this is your first time, again, don't increase your risk. Just risk the 0.75% that I told you guys. And we'll see how that goes. Is there any other questions? So I'm going to, because I'm about to end the live session. So the key thing here is, if you are in this trade with me, if the trade achieves a 1:1, so if you're risking $250 and you get $250 in profit, I'm hoping this trade, gold is going to sell, but I'm just hoping we don't get faked out before that heavy selling comes. If you're risking $250 for this trade, and you get to a point where the trade is $250 in profit, set break even, or set break even if you want to secure some profit. But the key thing, set break even. I'm telling you guys this because I'm about to end the live session. Or if you don't know where that is, at around 1817.4, if gold hits 1817.4, well, that's relative depending on your broker. But anyway, if gold is 30 pips in profit from where you entered, so for me, I entered at 1820.18. So if gold gets to 1817.18 for me, I'm using FTMO, I will set break even. Is there any question on where you guys should set break even? If you don't want to hold, the trade is currently in profit right now, but I'm liking this wicks from the top. You see that whole buying pressure that came up and they brought gold back down. So I'm liking it. So for me, I'm holding. I really have nothing to lose. I can lose 3K. That's fine. I'm already up 6 for the day. The risk to reward is on my side. But for you guys, do not risk 1.5% like I did. If you're just starting for the day, I told you guys, enter the trade, with 0.75% risk. So that's 750. No, that is 1,500 on a 200K account. If you win this trade, you're up 3K. That is 750 on a 100K account. If you win this trade on a 100K account, you are up 1,500. A nice one is to, and I can hold on for just because it's coming back down before I end the live session. But if you guys have any last questions, now is the time to ask them. Man, this would be a nice win today. Yesterday, we missed like a US 30 sell by like 1 minute. I was so mad about that. So if this trade gets here, let me delete this for now. Oh, geez, I didn't mean to delete that. And for the EA, that's still pending. So the coder is still working on some last minute things. So, I mean, don't worry don't worry too much about that. When it comes, I would rather give you guys a nice product. It might take a little bit longer, but I just want to make sure I give you guys like a nice product. And actually we can see how the EA is doing. I was looking at it on my FX book today. So it's up 5.1, and I just started this like a week. So the same thing I'm doing with the EA, right? I'm only setting sells only. So you can see it's only been taking sells. Shorts won 97%. So it's won 97% of all the sells. The open trades I have are this. You can see they're about to hit full TP or they're about to hit profit. And let's see, I think it normally shows the trades, no? History. So you can see everything that I've been taking, right? So the same thing I teach you guys on the live session is the same thing I apply even when using that EA that I'm developing. So it's the same thing. I just said sells only. The only time I'll set this EA to, and I'm hoping I have it for you guys in time for that. When we do get a buy SAR on gold, a closure, that's the only time I will set the EA to buys only. So, and I know this is just a test account, but I'm using the same parameters as I would on a live account, but I'm just stress testing it right now. But you can see, right, everything I've been taking sells only. You don't even see a single buy in there. You can see September, because I started it last week of September. So in 1 week had 3.6, and just 2 days of this month 1.45%. But anyway, hopefully, and this is the growth curve that we want to see, right? September 26 was day one when I started it, and just little by little with the max drawdown of about zero. I think it was more than 0.73. I want to say it went to like 1.1%, the max drawdown I've seen. But anyway, nothing is 100%. The key thing here, even when you guys have access to this, is to just follow, those simple rules I tell you guys. Do not trade this. If I'd traded or let the EA run during that period, I normally tell you guys not to trade, I wouldn't have had this return. If I had traded both buys and sells, I wouldn't have had this return. So the people who are going to have better returns is if you trade like me and just trade either buys only or sells only, and do not trade in the hours that I say not to trade. But again, if you want to trade both buys and sells, the EA does have a bunch of logic in there to help you manage trades, because it's a trend EA. I was hoping we get to set 1:1 down there. See, I'll hang on for till 11, so about 9 more minutes. I'll hang on. Yeah.
So for EU, you're waiting on the 1 minute, right?
Yeah, but I'm not gonna enter. I'm already in gold. Plus EU moves like a slug, man. EU, where was that trade?
It was on the 30-minute.
30.
30.
Yeah. Okay. So EU, it's validated. So this would be the trade if I was taking it. That's where I would be in the trade. But I'm
It
not.
was the 30-minute.
Yeah, it validated on the 30, but the distance was too far. So this is the 30 minutes right here.
Oh yeah.
But the trade closed a bit far down. So you come to the 1 minute and wait for the break and continuation. So that's the trade. I'm not going to take it. I'm already in gold, and I'm actually risking 1.5% for my gold trade. So I don't want to enter any other trade. But yeah, if anyone wants to enter EU sell, it's currently valid right now. And actually you'd be getting in at a discount.
Wait,
But
so if it goes back to that zone where you've put the arrow, and then a live 1 minute comes there, that's where you'd have to enter.
No, here, because the validation happened down here. The 30-minute candle closed right here. So I went down to the 1 minute because I was expecting this retracement. And then during this retracement, I would wait for a live SAR and wait for break and continuation. So this is the entry right here.
So it's already happened.
Yeah, so it's already happened. Yeah, this is it. Because the 30-minute candle closed here. So if you go to the 30-minute time frame, this was the entry down here. But because I said that this entry was a bit far away from this zone, I come down to the 1 minute and then wait for an entry on the 1 minute. So that's the 1 minute entry.
Okay. And what was the TP for this one?
50 pips. 25 pips stop loss, 50 pips TP.
But hasn't how many pips has it moved already from that zone?
It's moved about, I want to say, let's see, 6 pips. So you'd be getting it from what zone? From this zone?
No. From the bottom, on the left. No.
It's moved
there. Yeah.
The entry would have been here. Oh, my bad. That's not it. It's moved about 13 pips. So it would be ideally half your stop loss. So even though you entered on impulse down here, trade would have gone to 50% of your stop loss. Yeah, but this would be the trade right here. Anyway, I'm not taking it is valid. If you guys want to take it, feel free, but I'm not going to count this either as a win or as a loss. So I just don't want to be in an EU sell and gold sell. I don't like taking. I would rather choose one or the other, but not take both. And the other reason is I'm risking 1.5% of my account. So I normally try not to risk anything higher than 1.5% of my account. So that's another reason why I'm not taking EU. So today the US 30 breakout chooses to go to profit. I'm still working on this strategy for the breakout. But you see, this one could have easily been stopped out as well. Yeah, see, this one could have been faked out again. I'm trying to find a way for these breakout entries to avoid getting faked out, because this would have gotten faked out and it would be back in profit. I know the yellow is the 9 EMA, but the trade, anyway, I'll need to backtest this and find, because this breakout is pretty nice. Man, gold is just playing. Any last questions? I don't think we'll see any major movement. So just set break even when you're 1:1. Whether this trade hits TP or stop loss or break even, I will update in the either in the official trades that we track, and I'll send the results in the group. Fingers crossed. I know, based off of how gold is moving, I can tell gold is about to flash, and we might go to 1800 today, if not tomorrow. But I'm just hoping we don't get faked out before this happens. But other than that, I will catch you guys tomorrow. Feel free to ask if you still need any questions. You can DM me on Discord or post anything in the Discord. And for this one right here, this interview with Swaggy C and Q Banks, if you haven't watched it, I would recommend it. These two are some of the people in the industry that have been trading for over 10 years. So just sometimes listening to their stories, because I've been in instances where I've wanted to quit trading even before this, but I wanted to quit when I was a year into trading. And once you hear some of the stories from these guys, and like Q, I think like yesterday he had like a 50K profit on US30, because he actually trades US30 as well during market open. So you'll see some of these stories that if they quit when they were in year 1, year 2, like Swaggy was talking about, and I put this in here. He's talking about he's been trading for like 9 or 10 years, and he only started being consistently profitable in the last 5 years. So that is to mean, man, if you're trading and you really haven't even been in the game for 4 years, like, don't feel bad about yourself. It's, you're not late to the game. Don't care about other people, for it's working for other people. Like, one thing I've noticed, for you to become a consistent, profitable trader, it takes somewhere from 3 to 4 years, because you have to deal with a lot of things. You deal with FOMO, 4G, over leveraging. So it does take a little while. The key thing, just make sure you're not putting yourself into too much debt in this journey. If you have to, man, use demo for 4 years, for 5 years if you have to. But there's no amount of money you can ever, I don't call it losing, but you can never lose from trading that you can never get back. So, for example, Q right here, making 58K in 1 day, right? So that's another levels game, because hey, I thought I was making money when I was doing $500 a day. And again, this is not $500 every day, but having $500 days. I thought I was making money when I was having $1,000 days, but it's always levels to that. And then you see, oh, dude, this dude has been grinding for 15 years and now he's having like a 50K day just like that. So, just put in the work. Even for this club, it's not where I would have wanted it to be at this time, but for me, my vision for this club is like a 10-year vision. So I'm like looking forward to where we will be in 10 years, where we will be in 5 years. So, you might not see progress once you start, if you're looking the last 6 months or the last week or the last year. But the key thing, which is what I've also been practicing nowadays, every new week, I just want to end the week feeling that I'm a better trader. And if you can do that, that's going to build up after months and months, after years and years, and you'll be, after 5 years, if you're still improving week after week and not repeating the same mistakes, dude, like, you will be one strong trader. So that's what I wish for you guys. Don't give up. I know it's hard, even for me, right? It does get tricky sometimes and hard, and sometimes I still FOMO into trades, and then I get mad at myself. But let's just learn to control some of these things, to stick to our strategies and rules. And once we do that, I'm pretty sure we will be in a much better place and looking back at this 10 years or 5 years from now. But other than that, I will catch you guys later or tomorrow. If this trade, however this trade goes, I will update in the group. All right, I'll see you guys tomorrow. Bye.